Hello everyone, I'm Marcus from MiloX News. Did you know that Google's stock has risen 33% year to date? But some critics argue that the company has been too slow on the artificial intelligence AI front. Is Google really a dinosaur in the AI field, as some critics claim? And what does this mean for its main advertising business? In this video, we'll dive deep into these questions and more. We'll explore Google's performance, its approach to AI, and what it all means for us as investors. Google, a tech giant with a market capitalization of $1.51 trillion, remains the undisputed leader in the online search space, with a market share of 85.5%. But it's not all smooth sailing. By watching this video, you'll gain insights into Google's business strategy, its strengths and weaknesses, and the opportunities and threats it faces. This will equip you with the knowledge you need to make informed decisions about whether to buy, sell, or hold Google stock. So, stay tuned as we unravel the intricacies of one of the world's most influential tech giants. Welcome to MiloX News. Google has been in the news lately, and not necessarily for the right reasons. Despite Google's stock being up 33% year to date, some critics argue that the company has been too slow on the artificial intelligence AI front, even going as far as to label it a dinosaur. A year ago, Google was selling for more than $150 per share. In our previous videos, we mentioned that we liked it under $100. Some said there was no way it would drop below $100, but on November 3rd of last year, it was at $83.34. A few weeks ago, it hit an all-time high of $129.04. In February 2022, it reached its all-time high of $151. So even great companies can fall, and Google is no exception. But what does all this mean for us as investors? Well, when we buy a stock, we're buying a piece of a business. Every investment is the present value of all future cash flows. So, whether you're a beginner or experienced investor, we have something for you in this video. We're going to go over analyst estimates, our 8 pillars, the bull and bear cases, and then we're going to put the company in our stock analysis tool to make assumptions about the future and determine what price we should pay today to get the returns we want. On this channel, we are big advocates of being value investors. We want to look at a company and make sure the noise behind it doesn't distract us from the fundamentals. For example, there has recently been criticism of Google for its approach to AI. Some say Google was too slow to get into the AI game, and now they're moving too fast. What does that mean? Well, they're integrating AI into their own search engine, and some fear this could end up cannibalizing their main advertising business. But is this really a problem? In my opinion, AI could help make advertising more efficient. Google AdWords, for example, is a wonderful product. Google wants to reward you by charging you less the more relevant your site is. So, if your website is highly relevant to the keywords that are found, you'll pay less for an ad. This improves the user experience and keeps them coming back, which in turn benefits Google. Before we continue, remember to like this video and subscribe to the channel if you haven't done so yet. Now, let's talk about some numbers. Google has a market capitalization of $1.51 trillion. That's if you buy all the shares in circulation in the market at the market price. Now, the value of the company is exactly the same, which essentially means there is no debt in the company when you take into account the cash. This is incredible, guys. It's very difficult for a company to go bankrupt if it has little debt or has enough cash to cover all its debts. A couple more things we should mention. Google doesn't pay dividends, which makes sense as they consider themselves a high-growth company. Their 1-year pay is 25.8, and their 5-year pay is 30.6. This might seem a bit expensive, but for a company like Google, which has a great competitive advantage and a high return, it might not be. This leads us to talk about the return on invested capital. Google does a good job in this regard. The market average is 9 or 10%, so Google surpasses this average. This is an indication of a competitive advantage. You want to pay a premium for a company that has a good and increasing return on invested capital, as well as growth potential. Now, let's talk about the bull and bear cases for Google. On the bullish side, Google is expanding its partnerships in the cloud and artificial intelligence. This could open up new revenue and growth opportunities for the company. In addition, Google remains the undisputed leader in the online search space, with a market share of 85.5%. On the bearish side, Google faces increasing competition in the digital advertising space. Companies like Amazon and Facebook are gaining ground. In addition, Google has faced criticism and regulatory scrutiny for its dominance in the online search space. In summary, Google is a solid company with a strong competitive advantage and significant growth potential. However, as investors, we must be aware of the risks and challenges the company faces. Before we finish, remember to like this video and subscribe to the channel if you haven't done so yet. I hope you enjoyed this analysis of Google. As always, I invite you to leave your comments in the comment section. What do you think of Google? Is it a buy, a sell, or a hold for you? Thank you for tuning into MiloX News. I'm Marcus, and I hope you enjoyed the video. Don't forget to like the video, subscribe to the channel, and leave your comments. Until next time.